Look, if you're stuck waiting forever for returns from your private investments, feeling like you're chained to a slow-moving train that never gets to the station, you're not alone. Passive investing in private equity or venture capital feels like playing a game with no scoreboard sometimes. You hand over your capital, and then what? Months, even years pass, and you barely see anything back. The frustration builds up. No liquidity, no control, no real way to know if the strategy is even working. Meanwhile, your money sits there, trapped in deals that feel like black holes. It's maddening because you want to grow your wealth, sure, but more than that, you want to feel alive, connected, in the loop. Passive investing often lets you down on all those counts. Now, the secondary market. This is where the story shifts. Buying and selling stakes in existing private funds or companies before they hit public markets isn't just a relic for institutions with deep pockets. For limited partners like you, it's a secret weapon. If you're tired of the long wait, secondary deals can flip the script. You get faster liquidity, better pricing if you play intelligently, and above all, exposure to assets with real, proven trajectories, not just hopeful bets. But, and this is huge, you cannot just dive in blindly. Secondary markets have sharks, false signals, and traps set by sellers desperate or clueless. You need a sharp system, a methodical approach that most investors totally miss. Here's what to do. First, forget about chasing the biggest names or shiny new funds. The secondary market is about precision. You hunt for deals with transparent performance histories, where the underlying companies have milestones hit, revenue growing, risks de-risked. This isn't glamour investing. It's about cold, hard facts. Demand full access to portfolio data. Insist on getting beyond the glossy pitch. You aren't here to flirt with the unknown. You want cold certainty masked in secondary shares. This flips your power from passive to active. Even if you're not running the show, you're calling some shots. Next, timing. Never ever buy secondary stakes at the market peak just because everyone else is. That's foolish and a fast track to frustration. The market swings. Deals get discounted when sponsors want out or when dry powder floods the system. Your job is to exploit moments where fear or urgency create opportunity. This means monitoring deal flow constantly, building a network that feeds you proprietary insights, because public or standard sources aren't good enough. If you can't access insider-level information, you're just gambling. And here's a brutal truth. If your limited partner agreements tie you down with no end, no secondary transfer rights, then your hands are tied. Push hard for flexibility up front. Fight for clauses that allow you to access secondary deals or to sell stakes early. That freedom is power. Without it, you're locked in, stuck waiting for someone else's timetable, and that's a loss you mustn't accept anymore. The payoff? You get a portfolio that breeds clarity over speculation. You reduce your exposure to zero visibility risks. Your capital works like it should, cycling through positions that have momentum, not hypothetical blueprints. You gain the ability to pivot, not just hope. Passive investing in primary rounds is like planting seeds and walking away hoping for rain. Secondary deals let you pick the fruit already growing and decide exactly when to eat it. Look, the world insists you play by its slow, blurry rules. Don't buy it. Your capital isn't a donation. It's the engine of transformation. Use secondary markets to command liquidity and insight. Build the muscle to analyze what really matters. Underlying deal viability, exit pathways, timing, discounts. Master that, and the slow drip of private returns becomes a fast injection of growth and control. You want to stop freaking out every quarter about when you'll see results. You want to be in the driver's seat, making moves that align with real data, not hope or hype. You want to own options, not just tickets in dice rolls. Secondary market deals aren't just better for passive investors. They're essential if you refuse to settle for the system's slow, opaque promises. Do that, and you're no longer just a limited partner. you're a limited partner who demands, acts, and wins. Subscribe to our YouTube channel and check the featured link to discover more.